Hey traders, Nick Shaheen here looking at Micron. So this is a request. Somebody sent me a question about it, and it's kind of an active stock. So the emotions are high on it. People either love it or hate it. Before I forget, at the end there'll be like a subscribe little button. So to the YouTube channel, it's free. So go ahead and give it a push if you're not already a member. So subscriber, I should say. All right, so this is a short-term 240 minute chart. So every candle, it's not a daily chart like you used to seeing, but it does tell a lot. So we've had a good rally off the bottom, and is it time to still go long from here, like a 50% rally at least from the June lows? So for me, if I'm long, I'll probably stay long, but if not, there's probably going to be a better entry point. I want to see it test the 48 level just from the short-term perspective, but I think there's a longer-term story in this guy. So I'm going to switch first to a daily chart to see if the story changes. So just based on the 12-month, this is about a year's worth of action every candle one day. It tells me that the bulls and bears fought it hardest closer to 42 than where it's at. I'm not saying it's expensive. In fact, it's pretty cheap, but it's always been cheap. I remember it was selling at 3 PE at one point, and people told me that it's going to be a bear trap. A bull trap, meaning a value trap. You jump into it. It's still a 6 PE after this entire rally. So, but 2%, 2 times sales. It is in the line of fire of the China debacle with the U.S. So you never know, and they probably have a big chunk of their revenue stream coming or tied to China, not necessarily coming from it. All right, so we look, it does rally in waves, and it gives back some. So it rallies, gives back, and then completely gave it back, and then here we are. And this is about a year ago. It wasn't that much higher, or lower, I should say. So we're still within the range. Clearly, I need to see more time. It all depends on the time frame that people are investing for. So if I'm just trading, I'll go back to my initial statement. Go here. I would wait for confirmation that indeed they want to use this zone here as footing. And as long as they're above 47 and change, this is a moving target for me visually, then the reins are still in the hands of the buyers. So the dips will be opportunities to go long because the dips will give higher highs. For this one, if I'm eyeballing it, there should be higher numbers, but I think to get the proper picture on it, I have to step out to a monthly chart, and here we see that there could be a breakout off of this neckline here, 47 and change, that could be happening, and that has a lot higher to go. And in fact, if I go to a monthly chart, so this is 1 month per candle. So this is long term, going back to the 99. So the dot-com bubble, basically. It was definitely higher. You can see where it's at. But it may be part of a breakout that's already in progress. And those breakouts are usually slower moving. So there'll be periods of dips. And so, for example, this purple trough, bowl, whatever you call it, rounding bottom, and another one a lot smaller. This looks like a cup and handle-ish, meaning the bulls and bears fought it out for a long time, and the bulls took their time fighting it back, and the bears did the same thing, only a lot shorter and not as deep, although pretty darn deep, but a lot shorter. So the bulls are clearly starting to gathering momentum, and then as soon as they broke out, this white dot was my goal for it, and it exceeded a little bit. Why did I go there? Because of this. So from here, they're back to that fight line, so to speak. So to me, visually, this is a decision moment zone where they could, chop around here to continue on higher. I think technically there should be higher targets for this bull, because it should be at least as deep as this. And what is this, 35 to, oh geez. Okay, so there's definitely a lot more upside from here. I would not be shocked to see it in the 60s. I'm not calling for it, but I'm saying that this rally could have a lot more to go. So any which way you slice it, this is a monthly chart again, so it's slow moving. So it could have weeks of downturns, at least days. So in theory, this is the target of a rounding bottom like this. So if I visually do it, it's going to be here or higher, somewhere around here visually. So also I see this guy here doing something like this. I don't know. All these are possibilities, but all I know is that this was a pivot zone and the bulls prevailed. They wasn't perfect low, but the Christmas crash was pretty crazy, right? So back to shorter time frames, you can see the price fluctuates up and down. This was the Christmas correction, way off these silly lows here. So if I'm long, I'm staying long, especially if my time frame is longer term than shorter term. If I'm trying to scalp in and out, I should get into probably 2-hour charts or even 60-minute, 15-minute. All depends on what I'm trading. So here's the 15-minute chart. It tells me that $49 for the short term should be support. Here we are this morning where we've had the Saudi Arabia attack headline and everything fell out of bed, but not really. Everything is catching. In fact, the small caps are green. Apple was green. Some of the momentum stocks are green, like Facebook. Netflix, I think, lost his green. CRM. So here we are. This guy is trying to stabilize at a neckline. Why is it a neckline? Because we've had some consolidation here at around 49. So 49 and change for the last, I'm going to eyeball it, a couple of weeks, has been pivotal, has been an area where bulls and bears like to fight it out. I think the real fight is somewhere around 50-50, not 50-50 chance, $50.50. For the short term, that's really where the bulls want to get back to and try to take to retain the reins on it, to try to recover this zone and establish it for higher prices. But step one is to hold. Otherwise, you're going to fill that little gap and fill that little gap. So if 49 holds, I'm going to eyeball it, then we're good to go to recover and fill that gap up here. So if not, then I look at another support zone at 48.50 and maybe 47 and change before it fills the gap down here. As far as trigger points, short term 49.90, let's call it 50 for a round number, would get me excited to try to start close that gap, although there should be some resistance at 50 and 10 cents basically. And conversely, if 49.50 fails, then we get to 49.20 or 49. So really short term here, those were the numbers I just rambled off. So a break above here and a break below here will get me either chasing it down or chasing it up. That's the super short term. All right. Nick signing out. If you have any questions, let me know.